Right now, the entire world is witnessing the emergence of the single biggest market opportunity our generation could ever see. Much like the early days of the S&P 500, where a modest investment could blossom into millions, cryptocurrency presents a once-in-a-lifetime window to build extraordinary wealth. Yet most people remain unaware or uninterested, risking being left behind as a select few claim the lion's share of the gains. But you, yes you, have stumbled upon this lesson, and that gives you a rare shot to join the elite 1%. Even starting with small amounts, you can begin today to plant the seeds of a future millionaire portfolio. After 7 years of full-time trading and 5 years immersed in the crypto space, I've created this no-fluff, experience-based guide to help you get started. By the end of this video, you'll grasp the core principles of crypto, investment strategies, analysis methods, revenue avenues, and practical tips for managing and securing your assets. Stick with me, and you'll leave thinking and investing like the top 1%. Before you can understand why crypto is changing the financial world, you need to understand what it actually is and why it matters. At its core, cryptocurrency is a new form of money and technology that allows people to store and transfer value securely without needing a bank, government, or middleman. It's built on something called blockchain technology, an open, decentralized, and tamper-proof digital ledger where every transaction is recorded and visible to anyone in the world. That means no hidden fees, no closed-door manipulation, and no censorship. It's money that works on math, not trust. But what makes it so revolutionary? Traditional systems rely on centralized authorities, banks, governments, and institutions to verify transactions and keep records. These systems are vulnerable to errors, corruption, and manipulation. Crypto flips that model on its head. Instead of one institution holding the power, crypto uses consensus mechanisms like proof of work or proof of stake, where a global network of computers agree on what's true. That creates a system that is fair, transparent, and nearly impossible to cheat. Once something is written to the blockchain, it's locked in. It can't be changed, edited, or erased. This makes fraud incredibly difficult, and trust finally becomes something you don't need to hope for. It's built into the code. Cryptocurrency isn't just digital money. It's a movement toward a more open, secure, and decentralized future, where power is distributed and financial freedom is accessible to anyone with an internet connection. So if you're still thinking of crypto as just internet money, think again. It's the foundation of a financial revolution, and we're just getting started. Within the crypto universe, Bitcoin stands out as the premier store of value. In an age of endless money printing where fiat currencies steadily lose purchasing power, Bitcoin offers a fixed supply of 21 million coins. It's immune to inflationary dilution, enables near-instant global transfers, and removes the need for banks or governments. Bitcoin isn't just an asset, it's a rebellion against centralized monetary control. And with rising interest in alternatives to fiat, Bitcoin's role is becoming more critical than ever. The second major innovation is DeFi, decentralized finance, where smart contracts on networks like Ethereum, Solana, and Binance Smart Chain automate financial transactions. This disintermediates banks, enabling borrowing, lending, trading, and insurance without a middleman. It's cheaper, faster, and borderless. DeFi is already disrupting traditional finance, and its trajectory is only pointing upward. Stablecoins like USDT, Tether, and USDC, or USD coin, represent digital versions of fiat money, usually pegged 1-to-1 to the US dollar. These tokens provide stability in the otherwise volatile crypto markets. They're used for trading, liquidity, and as a safe haven during market downturns, all while remaining within the crypto ecosystem. We're living through a silent crisis, the steady erosion of fiat currency value. Inflation is no longer just a developing world problem, it's a global one. A $100 bill in 1900 could buy a small fortune's worth of goods. Today, it barely gets you dinner for two. With central banks printing trillions in stimulus and debt spiraling out of control, our purchasing power continues to shrink by 3-4% annually, often more when you factor in real-world costs like food, housing, and healthcare. Now, considering the looming risk, the US dollar potentially losing its global reserve currency status, and if that happens, Due to rising geopolitical tensions, the BRICS alliance, pushing for alternative settlement systems or simply a shift in trust, it could devalue the dollar by 20 to 30% almost overnight. That's not just market speculation, it's a scenario top economists and hedge fund managers are actively preparing for. In that light, crypto becomes more than just a speculative asset. It becomes insurance. While gold has long been the go-to hedge against currency debasement, crypto is its digital successor, borderless, programmable, divisible, and transparent. It offers the security of decentralization, the potential for high returns, and the flexibility of 24/7 access. You can send Bitcoin across the globe in minutes, stake Ethereum to earn passive income, or tap into decentralized finance, DeFi, protocols to escape traditional banking limitations. Crypto is no longer just a tech trend. It's a financial survival tool in a shifting global economy. And for the retail investor willing to learn and navigate it smartly, it may be the greatest wealth transfer opportunity of this generation. Bitcoin is verifiable, instantly transferable, and deflationary by design. Its supply is fixed, its portability effortless, and its transparency complete. Gold, by contrast, is bulky, opaque, and difficult to divide or transport. With Bitcoin's market cap still under $2 trillion compared to gold's $15+ trillion, a mere 15% capital shift from global fiat reserves to Bitcoin could push its price well above $1 million. DeFi's explosive growth suggests the next wave of tokens could deliver 50 times to 100 times returns. You want to find undervalued projects early. Tools like DeFi Llama let you monitor total value locked, or TVL, across networks. For example, Coinbase's Layer 2 base has already surpassed $1.6 billion in TVL soon after launch. By comparing this to Binance Smart Chain's $21 billion peak, you can identify massive growth potential in up-and-coming platforms and tokens like Ethereum. Tokenomics refers to the structure of a token's economy, its supply, vesting schedule, incentives, and more. Use CoinMarketCap or CoinGecko to dig into fully diluted valuations, FDV, white papers, and unlock timelines. This allows you to avoid dilution traps and understand the long-term viability of a token. Want to simulate future price targets? Use tools like marketcapof.com. They let you forecast what a token's price would be if it achieved a larger market cap, helping you set realistic targets. Once you've identified promising projects, timing becomes critical. Tools like TradingView allow you to draw trend lines, apply Fibonacci retracements, and identify patterns for optimal entry and exit points. Two especially powerful models: cost of mining chart, which tends to indicate Bitcoin's bottoms, and terminal price model, which often aligns with cycle tops. Buy near mining cost levels, scale out near terminal levels, and you've got a proven buy low, sell high strategy. The 2025 trader isn't replaced by AI, but the AI-augmented trader replaces the undisciplined. The window of opportunity is open, but it won't be forever. You now have the blueprint: foundational knowledge, powerful tools, and proven strategies to navigate and dominate this space. If you're ready to take control of your financial future and think like the elite 1%, like this video, drop a comment with your biggest crypto question, and subscribe to Elite Trade Club, where every lesson gives you an edge the average investors never see.